Yahoo finance columnist Rick Newman is with us now. Rick, millions of Americans across the country have been waiting to see low gas prices, as Jill mentioned. They've been wanting them for years now, but now it's really hurting the economy and the stock market. Why is this having such a huge impact?
It is puzzling. Not so long ago, we thought that falling oil and gas prices were good for the economy, good for consumers. So just to, I think, take a step back and clarify this a bit, it is probably still the case that oil prices, as low as they are, they're now, I think, around $27, $26 a barrel, probably are still a net gain for the U.S. economy. We are much more a consumer of energy than a producer of energy. That means as prices fall, it's a big break for consumers. It's also a big break for businesses that consume energy, and we've got many more businesses that consume energy, so their costs are going down than we have businesses that produce energy. Nonetheless, it is becoming kind of a wipeout in the energy sector. The markets are bracing for some defaults. We've already seen some defaults. They're bracing for more possible bankruptcies, liquidations, mergers, consolidation, that kind of thing. There is a case to be made that this is all overplayed, however, because we will see consolidation in the energy sector. And you know, energy is going to come back at some point, whether it has to come back with oil at $30 or $40 a barrel or oil at $60 or $70 a barrel. That industry will become more inefficient. It will survive. We're just in the damage phase right now.
Rick, is there a point at which, because of the tensions that we've seen between, for example, Saudi Arabia and Iran, but yet the oil production continues as it has for the last couple of months, why aren't they sort of reining that production back in to help at least balance the price of oil or even let it rise a little higher?
You know, this is all very puzzling. We're not entirely sure, and I think the best way to characterize it is we are probably seeing a new dynamic in energy markets. Before, that is exactly what Saudi Arabia principally would do. They would scale back production a little bit to keep prices stable, which protects their own revenue. But there's so much new supply on the market that they're not doing this. This time around. It's kind of a new playbook coming out of the Middle East. Iran is just coming back online. They really need the oil sales at any price because of the sanctions that have been imposed on them for a long time. So they need to get back in the oil market as much production as they can put out there. So they're not going to stop pumping. I mean, let's keep in mind, though, we don't want tension in the Middle East to interfere with oil production. I mean, that would not be a good economic scenario under almost any circumstance. We are possibly in a transition where we're just going to have more abundant carbon energy than we've had in the past. And I think we will adjust to this. We should keep in mind there is considerable upside to many parts of the economy from everything that's happening here.
I think a lot of consumers who are happy about low gas prices, but who are also casual investors, they're worried about their 401ks, wondering, is there a balance that you can strike where gas prices are relatively low, but, you know, the stock market's doing well as well? Or is this just how it works? Is this just the relationship?
Yeah, why does it have to be an either or is a reasonable question. I don't think it has to be an either or. We are going through a big transition in energy markets right now. You know, what happens at times like this is there's often an overshoot. This could be an overshoot in energy markets. That doesn't mean we're going to have a snapback tomorrow. But there's a lot that we just don't really understand here. I mean, for all the data we have, we just don't really know. So I think if we do see a recovery in oil prices, it is reasonable you'll see a relief rally in the financial markets. And I don't think oil prices have to go back to $70 for the markets to feel good. In fact, if they did, I think we'd all be saying, shoot, we liked oil at $30 because gas was so cheap. But I think if we can see over the next several months, getting into the second half of 2016, if we do see the oil price stabilize, maybe up toward $40, I think you will definitely see relief in the markets. I don't know if that's going to happen, but I think markets would react favorably if it did.
Rick, I'm looking at a research report from Morgan Stanley, Lisa Shallot, who I worked with for many years at AllianceBernstein. She talks about what clients should be looking at right now, and she says consider raising cash for clients who have a very short-term horizon, and for clients with long-term horizons, they should consider focusing on risk-adjusted returns and opting for some large cap and stable growth, quality dividend stocks. Break that down for the viewers here.
Yeah, well, I mean, it very much depends on whether your focus is short-term or long-term. If your focus is long-term, there's a good case for doing nothing at all. Hopefully, you've balanced out your asset allocation in a way that makes sense. If you have a good plan and a good advisor, you're prepared for a situation like this, which means you're not overrepresented in stocks. If you're doing a short-term, what's your comfort level with risk-taking? I mean, there certainly are people right now talking about a good buying opportunity for certain shares. I think being selective is important. You do hear a lot of people saying focus on what you just mentioned, large cap stocks that pay dividends, because that dividend is sort of like an extra return on top of any appreciation you'll get on the stock. You can also make the case that those are the most oversold stocks because everybody wants to hold those right now. So this could be there's some big names that are pretty beaten down right now. Apple, for instance, well below $100. I mean, if you think this market is oversold, you might be looking at some of those high quality names. It could be a great opportunity to buy them at what you might call a reasonable discount, but that depends on your level of risk taking. That would be a risky move because sentiment is working against you right now. You're counting on sentiment turning around in the next few months.
Rick Newman for us. Thank you so much. We appreciate it.
Welcome.
I think the thing that Rick was saying, and I think what the research is showing right now, is we talk about what investors should be doing. If you're invested in a 401k, as the question that you asked, clearly that's for retirement. That's 10, 15, 20 years away in many cases for some people. So in this situation, the markets are tumbling today. Hang on tight. If you have a short-term horizon, though, it might not make sense. It might be a good idea to perhaps raise some cash and ride it out.
All right.